Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone feeling even worse today, so we're going to keep it nice and quick. Couple things I want to point out. For the S&P 500, I'm watching the 12 and 26 period exponential moving averages. Generally, I trade with the 4 and 8 period for day trading on the 5-minute time frame and the hourly time frame as the backbone of some of my day trading. And I use a 12 and 26 EMA from crypto, and I use that on the 4-hour, daily, and weekly, and playing around with it with stocks with longer term time frames. But what I want to point out is the daily exponential resistance. After we topped out and started the significant pullback in pretty much all of December, we had a bounce reject, a second bounce reject, a third bounce reject, and then a fourth rejection. We then pulled back, formed our daily higher low of support, got over the resistance, and then turned it into support. We back tested it and held it once, twice, and now we see continuation today. So this is the move getting some follow through. In my opinion, it was Netflix news about raising rates that was at the forefront of the bullish action today, with the tech sector responding really well to that. Netflix earnings are on Thursday, which the tech sector will respond to as well. But this is the kind of scenario where the sideways trading recently has certainly been bullish. The bears have not been able to get any follow through. And any time we see any kind of weakness in one of the sectors, there's another sector there to pick it up. So bulls closing strong, but this does not, remove our thesis of being cautious because risk to reward is not favorable for bulls up here. And one thing I zoomed out to, the weekly time frame, the exponential moving averages, with our resistance rejecting 1, 2, 3 times back in November and December. And then here we are approaching this level right now. So what are the odds that we're going to turn this level into support on our first attempt on this V-shaped recovery bounce on declining volume? And in my opinion, that is not likely to happen. So resistance is in the 261s, the upper 261s. We can certainly go above these resistances and then pull back under them to show a clear rejection. So I'm not going to treat it as just a clear level, but we're definitely going to be looking for some consolidation on this weekly time frame to establish a higher low. The question is going to be, do we have a bullish reaction to tech sector earnings that have us see continuation into these resistances, or is that going to be a catalyst, the tech sector earnings, for this consolidation to begin? At this point, there is absolutely no weakness in the market. We had a bearish reaction to Brexit that the bulls bought that dip of. We can see the dump here. 5-minute RSI in the low 20s has been on point the past 3-4 weeks. This entire bounce, if the RSI, and haven't even gone back and looked at all the examples, but I can remember off the top of my head at least 3 or 4 different examples in the past few weeks where the 5-minute RSI under 25 is the buy zone and getting very solid bounces off of that level. So keep that in mind. Keep an eye out for that. But bottom line is V-shaped recovery, bulls buying the dip from those oversold 5-minute conditions. The hourly time frame, the bulls are just fine. And our new higher low is 258.72 at the low of that consolidation. So that's our new support level. If that level holds, the bulls maintain full control. And again, everybody's looking towards Thursday for the tech sector to begin to react to Netflix earnings. Checking IWM, so a couple things we highlighted yesterday were the week close on IWM and the hourly pullback and consolidation on SPY into the close, which was a bit different than the previous couple of days. But obviously none of that got any follow through for anybody. The low of yesterday, 142.09, held. That was a double bottom, and bulls obviously bought that dip and closed up near the high. So we do still have a tight range here with 144 our top and that 142.09 our double low now. And we've pretty much been within this range for 5 days. A little bit of lower wicks there below that 142.09 level. But this is the range that we're watching, and if we get that bull break over 143.99, we're going to look for follow through. And again, the weekly time frame, exponential resistance being tested, and it too has kept the price fairly contained on this pullback. XLF following through for the bulls after the response to C earnings yesterday. We're rolling out with more earnings this week. We had the bull break of the double top at 24.55. Slight uptick in volume today with continuation and a strong close. And this is ideal for the bulls. They're just keeping chugging along. We got resistance at 25.22 from here. Looking at the weekly to see where the exponential resistance is. Again, it's given the bulls some trouble, and we're heading up towards this level. QQQ daily bull break today on the back of Netflix raising rates, getting a big bull reaction to that. 161.52, bit of a double top that broke bullish, closed up near the high of the day. And next major resistance level we're looking up at, there's actually a little gap here at 164.03 to be watching. But we look at the weekly, and here we are at these exponential resistances, which also have 1, 2, 3 rejections, and we're watching for the potential that we get another rejection from these exponential resistances. VIX, still nothing for these bulls. 18.12 was the low. We dipped down under 18. No hourly trend change. So we had a scenario, and natural gas is the example I'll use, and we'll get that next. But I was watching natural gas for an oversold bounce on the weekly time frame, and not even oversold on the, well, let's see, that's oil. Not even oversold on the weekly time frame, but just so extended that we know a bounce is coming. And my criteria on the 4-hour time frame was I was consistently day after day saying we know a bounce is coming, but we're waiting for the 4-hour trend change. And we ended up dropping another significant, maybe even another 10% from when I started saying that. But we never gave the 4-hour trend change until we built this base of support before the breakout. So here on VIX, it's the same thing where it's just wait for the hourly trend to change, and it has not done so. We have not seen a clear higher low and higher high on the hourly time frame at all during this pullback. So we don't have any bounce starting on the daily time frame until that happens. So at this point, looking at the hourly time frame, we've got resistance at 1905 and 1920. I'd say anything under 1920 is just an hourly lower high. Bulls have to see a change in the hourly trend for any kind of bounce to get going. NatGas USD, so pulling back on the 4-hour time frame, I'm still holding a position, and I will use the 4-hour base of support that gets established. We're going to look for a 4-hour support level to be established, and then a bounce and a lower high to form on the 4-hour time frame, because the pullback is significant enough that we can anticipate the likely scenario is an equilibrium. We're not confident that the low has been found yet as we close near the low of the day, or the low of this pullback, and that is the low of the day. It's a bearish reversal candlestick on the daily, indicating that some consolidation is coming. Again, we bounced essentially 25% in just 3 days. So this is the pullback now, and we're going to look for a 4-hour tightening range, and that will see a break likely leading into the inventory report. So we'll see if we get further pullback tonight. We lost the exponential support, back tested and rejected from it. Some clear hourly lower highs to be watching. Nothing's oversold, so we could absolutely see another leg down before this 4-hour higher low is established, but that is something that we're keeping an eye on for a tightening range on the 4-hour chart at some point this week. Oil is looking like a potential bull flag on the daily time frame, where we have brief healthy consolidation, support established down here at 50.39. Last video we highlighted the hourly time frame, how it was tightening with the double bottom and 51.78 key resistance, and we just formed an equilibrium and highlighted to be watching for that lower high. So we had the low, high, double bottom, lower high, higher low. So a nice equilibrium, and the bull break was this morning. So bull break, actually the bull break occurred a couple times here, but waited until the morning to get follow through. 51.29 was the signal, saw a $1 plus move, and now keeping the hourly uptrend. So if we can keep this hourly uptrend through tomorrow with the inventory report, we'll be looking for the potential of a daily bull flag here. And the exponential moving averages, seeing a bull cross is definitely notable as well, as it's been a bear cross ever since the 70s. So oil could still see some continuation here if we failed to break 53.29 and have a bearish reaction to the inventory report. We're going to be looking at a little lower high and lower low and consolidation to continue, which would give us our weekly pullback to try and form a weekly higher low. So that's where we stand into tomorrow. Earnings continue to be the highlight. Exponential 12-period resistance on the weekly time frame for a lot of names is approaching. Natural gas scouting that 4-hour higher low and an equilibrium. Oil, potential daily bull flag. SPY bulls still in full control, but definitely not just going to disregard the fact that we definitely need weekly consolidation in the near-term future. Hope you're doing well. Do some good things. We'll see you soon. Thank you.